Let's do a disclosure question. You've seen a disclosure question for CC, so that one I want you to try. Okay, try do that one. Okay, except here they want you to show the changes in equity and the financial position. So financial position, you'll have A equals O plus L. Remember, because they want the whole statement, I'm assuming they want the whole statement, then you can check if it balances. If they don't want the whole statement, then just do what they require. Okay, but you'll have to look at the instructions. Right, so for next week, try do those two questions so we can finish it. Next week, I'll finish those two, and then we can start a new paper. Okay, I should be able to finish another paper as well as this one next week. So at least then we've covered kind of 1.5. All right, so obviously I'm going to do 2 of the 4 questions now. I'm going to do question 11 quickly now. Not 11, question 1. Okay, question 1 is statement of profit and loss and other comprehensive income. Okay, exam technique is very important. Okay, just to recap, remember with partnerships, okay, do you show partner-specific transactions in the statement? No, you don't. Okay, you only show transactions that relate to third parties, other people, not the partners. Does that make sense?
Yes.
Okay, that's very important to remember. That's theory that we've covered before. Okay. All right, obviously templates take a bit of time to draw up, but I'm going to keep it simple. Other income, other expenses. Okay, notice there won't be any tax because this is not a separate legal entity. Okay, obviously this profit will be posted to the appropriation account. Okay, hopefully we see a question that gives us appropriation again, and then we can revise. Okay, it will come up in one of the papers. Obviously, different papers test different things. So in this paper, they're testing disclosure mainly. All right, so now that I've done that, all I need to do is go to the question, okay, read the question, get my marks. Okay, remember, I only want to look at income and expenses. I don't care about anything else that doesn't affect income and expenses. Does that make sense?
Yes.
Okay, and you need to narrow your focus because what I have seen in the past that students kind of get overwhelmed and then they want to do everything. Okay, this question only asks for the statement of comprehensive income. You don't have to look at the assets and liabilities because that would be part of the statement of financial position. Are you okay with that?
Yes.
Okay, if you get your exam technique right, then you'll never ever run out of time. Okay, sometimes you might run out of time because you've tried to do too much or you overthought it. Okay, so capital, SOCI, land and buildings, financial position, vehicles, financial position, depreciation, I do need. That'll be part of this question here. Okay, I don't have enough information. I'm not going to work it out yet. Accumulated doesn't get disclosed here. Only the working does. Okay, the calculation, the actual amount, the expense part. Okay, so I know I'm going to have to do that for vehicles. I know I'm going to have to do that for equipment. I'm already making a mental note. See, this is just what I'm thinking about when I do an exam paper like this. Okay, long-term loan, financial position. Bank, financial position. Trade payables, financial position. Debtors, financial position. Sales, now we're talking. Okay, something that I actually need that I'm going to get marks for. Okay, so 5, 3, 6, 8, 20. Salaries and wages, purchases, I need. Okay, we have to do the same thing as before. I'm going to have to add lines here. Opening stock, why? See, exam technique. As soon as I read the word purchases, I'm thinking periodic. Okay, purchases were 302, 530. Okay, salaries and wages, we assume that that's for everyone else other than the partners. Unless we've read the adjustments, we won't know yet, but we might have to adjust. Okay, so salaries and wages was 123,600. Okay, interest on long-term loan would be a finance cost that you could maybe put here. And then you could just say profit before, because that's kind of how they like disclosing this. Profit before interest or finance costs. Let's use the right vocabulary. Okay, if you want to. Right, just to add an additional level of complexity to the disclosure. Okay, so your finance costs in brackets were 4320. Okay, travel expenses. Let me just do it this so I can read the line better. Okay, 38720. Water and electricity. 41160. Settlement discount received. We spoke about this earlier today. Okay, it's going to be offset against your purchases because you need to tend to take this off your creditors. Remember, creditors give you discounts. You receive discounts from them. 2,400. Settlement discount granted. They're going to take it off sales. 2,000. Rent income received. 3,000. Motor vehicle expenses. 21160. Okay, is all of this okay so far?
Yes.
Just normal disclosure, hey? Allowance for settlement discount granted. Notice I don't need it, but I might need to adjust the allowance, and then I'm going to have possible credit losses. Okay, so when I see something like that, I'm thinking about how is it going to affect this. Okay, so I know I don't need it, but I know I could need it if I have this. If I don't have it, I'll just put a 0. If I do have it, I'll put a working. Okay, generally you will have something. Okay.
But what do they mean by allowance for settlement discount granted?
Okay, so when it's an allowance for settlement discount granted, okay, good point. Okay, it's going to be an adjustment for the settlement discount granted. So in other words, okay, if it, sorry, I read that wrong. It should have been allowance for debtors, bad debts. Okay, if it was bad debts, it would be credit losses. Because it's settlement discount granted, it's going to affect the settlement discount granted, which is that figure. Okay, it's going to make it go up or down. Okay, I think we even had this in one of our textbook examples. Okay, I remember covering it with you where they're providing for discounts that will arise in the future.
Okay.
Okay, so because a discount allowed is seen as an expense, if you're providing for a provision for it, it'll be a negative asset. So you would, so this allowance would have been created by debiting the discount and crediting the allowance. Does that make sense?
Okay. Yes.
Okay. Yeah, I know we've covered it. We did do it. There was some examples, initial examples, when we did partnerships that covered that. Okay, just go back and have a look at those examples. Or just follow with this one. Okay, so building expenses, that's a bit odd, but it's possible. You can have repairs and maintenance, but if it's a building expense, I don't know, is it repairs and maintenance or something else? See, I'm thinking about these things. Okay, 17,010, great. All right, now you need to look at each question separately. Interest on capital, I don't need because I'm not looking at appropriation and I'm not looking at the SOCI. Ignore. Each partner is entitled to a monthly salary. That's nice to know. We don't show salaries for partners in the income statement. Carry on. M&T, share profits and losses equally. I will only need that if I need an appropriation account or statement of changes in equity. Don't need it for this statement. Okay, year-end adjustment. On the 31st of August says, for services rendered according to the partnership agreement, were paid to the partners as follows. Okay, both these amounts were debited to the salaries and wages account. Okay, should you show salaries and wages for partners? No. You have to show that taken out. Does that make sense?
Yes.
Okay, there's your disclosure for salaries and wages. Nice and simple. Point number 2. The only transaction involving equipment incurred on that date was for the cost. Okay, this is going to be a big, long year-end calculation. What was the year-end here? 31st August 2018. Okay, they should have said that in the required as well. Did they? Yes, they did. Okay, so I need that. Otherwise, I can't draw a diagram. Okay, so copy paste. What would the start have been? August, September. So 1 September 17. Okay, so there's the year. That's all I'm going to look at, the year. Okay, so now I've read this point. I need to post everything to it. But before I do that, I need to get those assets. Okay, so I've got vehicles. And I've got equipment. Okay, for vehicles, I've got costs and I've got accumulated depreciation. Vehicles cost 144. Looks like it. Accumulated at the 1st of September. Okay, be careful. This cost is at the end. This accumulated is at the beginning. So 12,000 here. Okay, equipment at cost 130. Depreciation 24. Okay, that does make a difference because I might have to adjust those figures. Right, so that's it. I've got everything. It's on my diagram. This was 31st August. Yes, so that's right. Okay, good. That was 1st September. Yes. Okay, now I can look at it. All right, the only transaction involving equipment. Okay, so I'm looking at this diagram. Okay, let's copy this and just paste it there as well. Okay, so 28 Feb 2018. Is 28 Feb during the year? Yes. 28 Feb 2018 is during the year. What happened on that date? Equipment with a cost price of 15. An accumulated depreciation of 14 at or on. Okay, so this needs to move down a bit. Okay, accumulated here was 14. All right, for this asset. Okay, obviously the cost won't change. All right, so equipment on that date with accumulate of that was traded in for a new one. Okay, so that was the old sold and then a new bought. Okay, so when we bought new, its depreciation has been correctly calculated at 75 Rand as at 28 Feb. Okay, so they're telling you that the depreciation has been calculated at 75 Rand as at 28th Feb. Okay, the new machine was purchased at a cost of 25,000 on the same day, and the supplier therefore allowed a 1,500 Rand as a trading value. So proceeds was 1,500 on the old equipment, and the difference was paid cash. Okay, perfect. All right, so now you've got everything. You've got the diagram. Okay, so there's the costs. There's the accumulated at the beginning. They tell you that 75 Rand was the depreciation. So 14 plus 75 gives you that figure. Okay, let's move this down. Carrying value. Oops. Carrying value is 925. The proceeds were 1.5. Profit on the sale of the asset equals, how much did you get? 1.5. How much is it worth? 925. Profit on sale of the asset is income. Okay, this needs to be disclosed. Okay, 575. Profit on sale of the equipment. Okay, brackets, you could even show the working if you want to, or you can just say C working, because you would have done that on your script. Okay, your answer sheets. Okay, there's it there. Okay, I've got that. All right. That's something I need to provide for. Why? It's part of income and expenses. Okay, this depreciation I also need to provide for. 75 Rand is the old. Okay. All right, so let's go back. Proceeds, I've looked at. I've got the profit on the sale. Okay, you bought a new asset. This new asset will be used for how many months? February you don't count, so you only count March. Okay, so March, April, May, June, July, August. I count 6 months. Okay, what was the rate of depreciation here? Didn't say.
I think you need to go a bit
Here's
down.
it. Next page.
Yeah.
Okay, 15%. Diminishing balance, it doesn't apply for the new assets. Times 6/12. Okay, March, April, May, June, July, August. That's correct. Okay, 1875. Okay, there's the new equipment depreciation. All right, what other depreciation do I still need? Okay, so I've got the 15. That was the old. Okay, the equipment was 130. All right, and 130 would have been the equipment at the end of the year. So at the end of the year, I had 130. I bought 25 during the year. So that means the old would have been 130 minus 25. Oops, no comma. Okay, is 105. Do you see that?
Yes.
Okay, so this is the old. So carrying value on the old.
Would you not have to minus the car that the equipment that you sold?
No, because you would have subtracted it from there. Remember, this is what you had at the end. So this at the end doesn't have this included. Does it make sense?
Yes.
Because if you sold it, it wouldn't be in there at the end.
Okay.
Okay, so the 130 is what you had basically remaining. This would have been in the 130. Does that make sense?
Yes. Yes.
Okay, so that is correct, yeah. All right, so 105 minus 24 gives you 81. Okay, did you hold that for the whole year? Yes, you did. So this is going to be times 15%. Carrying value times 15% for the whole year gives you depreciation for the old still, or for the existing. Okay, so what is that? 12,150. Okay, 12,150. Equipment existing. All right, sure, this is going to get quite long. Let's move this across. There we go, that's better. Okay. All right, so have I dealt with my equipment? Yes, I've got the existing done. Old sold, got it. Profit on the sale, yes. And the new, perfect. Okay, all I need to do now is just the vehicles. Okay, the only transaction for vehicles and equipment was that one, eh? Yeah. All right, what is vehicles? Vehicles is straight line. Ah, brilliant. Okay, so if it's straight line, obviously what you had at the end would be the same as what you had at the beginning. Straight line, so times that by, what is it, 20%. Okay, 144 times 20% is 28.8. Plus 28.8 vehicles depreciation. All right, and that's it. I've covered everything. Add and subtract. Oh, we'll just add actually, no subtract. Okay, there's the total. All right, depreciation done. 2.4, the long-term loan was obtained by the bank. Okay, and again, we need another timeline. Okay, these are financing costs. Okay, the loan. Long-term loan was acquired from the bank on the 1st of March. Ooh, it's in between, hey? See how important it is to draw a timeline. Helps a lot. Okay, that's September. That's August. This was when? 1st of March. Okay, the long-term loan was acquired. So loan. How much was the loan? Where's my loan? Where's my loan? Where's my loan? Yeah, long-term loan. It looks like 108. Okay. Following with me, making sense?
Yes.
Okay,
Yes.
so 108 at an interest rate of 12% per year. Okay, times how many months? March, April, May, June, July, August. 6 months again. Okay, 6,480 is going to be my interest on loan. All right, what else do they reach here? Payable on June every year. The capital amount of the loan must be repaid. Okay, so that's irrelevant. Okay, all of that is disclosure for a statement of financial position in terms of long-term, short-term. Okay, do I have to worry about the accrual? No, I don't. All I have to do is just show 6,480 as the interest on the loan. Okay, obviously, you would have had to have provided for the accrual. I mean, you can show it if you really want to, but it's not necessary. Because remember, it's just the disclosure. Okay, so there would have been an accrual for 2160, which would have been an accrued expense. Okay, but I don't need that because that I would only show in a statement of financial position. In this statement, I would just show that figure, the total, whatever I had for the year. Okay, so if I had the loan for 6 months, I have to pay 6 months interest. All right, 2.5. Included in the amount of water and electricity is 10,400 relating to insurance expenses paid during the year. That you have to show separately. You can't show two expenses grouped as one. Okay, so you have to take out the 10,400. You have to show that as insurance, 10,400. Okay, then they tell you insurance expenses are payable in advance in equal amounts, and the September 2018 payment is included in this figure. All right, so that means you've paid for how many months? 13 months, because the month end is August, but you've already paid for September. All right, so minus, open brackets, 10,400 divided by 13, minus 1 month. Does it make sense?
Yes.
Okay, copy paste. 9,600 is your insurance. Okay, take out the prepaid expense. All right, prepaid expense you would disclose in a statement of financial position. You're not asked for that. You don't have to worry about it. Okay, next, 2.6. An invoice amount for that amount relating to delivery expenses in respect of purchases on 31st was received on the 2nd of September. Okay, so it was delivered on the 31st, but only received in the 2nd of September. So that is an accrual. Okay, this is for purchases, so you do have other costs here. Add delivery costs for inventory. Okay, in brackets, 5280. Okay, next. Last point. On the 31st of August, inventory on hand. Thank you very much. They've given us the closing stock. 28080, closing stock. Let's make that a minus. All right, opening stock. I didn't write that in. Oh, hold on. This might have been the opening stock actually. On the 31st of August, okay, 31st of August is the closing stock. Do you see that?
Yes.
But then if I look at my extract, where's my inventory here? Do you see inventory here? No, I don't. I don't see
No,
any inventory. Do you see inventory here?
no,
Okay, so then I assume I had zero stock to start with. Does that make sense?
yes,
Okay, and then we're done. All right, so I assume nothing to start with. No returns. Cost of sales. Opening stock, 0 plus purchases minus nothing plus other costs minus the closing stock. Okay, your sales is that figure. Gross profit is the difference. Okay, your other income. Oops. Undo. Undo. Okay. Redo. Okay. 3,000. Okay, so other income. This I should actually have put here. I'm just going to put it in 3,575. Okay, just to make it look a bit better. Okay, this plus that gives you the other income. Okay, expenses. Ooh, also. Let's move that across. Let's shrink that. Come on, why can't I grab it? This thing is in the way. Okay, let me just stop the share just so I can grab the tile. I can't grab it with that thing on top. Okay, let me just share it again. Okay, there we go. Okay, so there's the column. All right, so those figures need to actually go here. Okay, just to make sure everything's right. All right, salaries and wages, update the figure. Oh, I've done that one, sorry. Redoing it. 38720. Okay, this one I'm going to have to subtract. 23160 17010. Perfect. Okay, other expenses, sum up. Okay, your profit before finance costs, your gross profit plus your other income minus your expenses. Okay, your finance costs, subtract. And that's it. That's the end. Okay, and that was for what? 36 marks or something like that. Okay, so you should actually like disclosure. This was a nice paper because they gave you so much disclosure. Yeah, that was out of 30 marks, 36 minutes. How do we do? Yeah, it took us around 30 minutes. Okay. Okay, happy with that?
yes.
Perfect. Okay, so those are two other questions that you can maybe do ahead of time, or not ahead of time, but in your own time, just so that you can complete it. Question 2, this one I want you to do for next week. Try to do that one. Question 3 as well. If you can do it for next week, great. And then obviously those are 2 questions, and then try to do the October-November 2018 paper, because I'm going to start with that one. It's not going to take all the time. It might take maybe an hour to go through those 2. Okay, and then we'll have 2 hours to go through 2018. Then we can complete another past paper. Okay, happy?
Okay, yes.
Perfect. Okay, I'm going to save this just to make sure I haven't lost it again. And then I'll send you the video links as well as the files. Okay, I'll send you these working so you have it. And then I'll send you the other one I did earlier as well. Okay, Cheryl?
Okay.
Perfect. Okay, have a good week. So yeah, next week we do have a lesson. Hey, yeah, 10th of November we still have one, and then you're busy writing for 2 weeks, and then we'll have another one again on the 1st, and then you're all ready and set for the 8th. Okay.
Okay.
All right.
Thank you so
Perfect.
much.